China just injected nearly 2 trillion yuan into their capital markets. Whether you want to take the 1.8 figure that's been floating around on Twitter or the 1 trillion actual repo operation, it's up to you. However, the point is clear. The PBoC is boosting liquidity, and it's only a matter of time before the excess spills over into the crypto markets. Now, this isn't just about China easing. We need to understand that when the world's second largest economy begins to open up the liquidity taps, every currency around the world, even the dollar, feels it. Even Bitcoin. The PBoC has been leading the liquidity race for the last year. And now, with the Fed easing rates, they are beginning to jump on board, along with the ECB and other global central banks. So in this video, I'll be breaking down how the Chinese liquidity flows across currency, commodities, and crypto markets, and why Bitcoin stands to benefit from it the most. Let's get into it. Right off the bat, we have this article titled, PBoC to continue CNY 1 trillion overnight reverse repo operations. Now, for those of you who don't know, the reverse repo is some shady backdoor facility that has been conjured up since 2008. It's a mechanism for the central banks to inject liquidity into the markets without coming outright and saying they're doing so. So it's a place for funds, investors, high net worth people to park their cash. The facility takes that cash, puts it somewhere to earn a yield. They pay that yield back for the people leaving their cash there. That's essentially how it works. It takes 2025 so far and shows us tiers of repo facility usage in China. So starting from short end up at the top, all the way down to midterm lending. So the short end would be overnight, and then we have 7-day, and then we have mid, which would be 3 to 6 months. And we can see China has been making full use of these facilities over the last year, in 2025 and in 2024. Now, not really concerned about the amounts. Yes, there are a lot. However, the point being is that China has been leading this liquidity boom, and in them doing so, other central banks have followed suit. And now global liquidity is on the rise. So the reason I say specifics aren't such a big deal here is because this is a macro trend. This is 3+ years in the making. And if you get the average trend right, you'll be in the right place to make a lot of money. And now while China continues these liquidity injections, the rest of the world will begin to follow suit. We've seen the Fed begin buybacks with the Treasury. That is another mechanism at which liquidity can be injected into markets. It is also another positive factor for rising global liquidity. Here we have a quick composite I made for this video. It's by no means pinpoint accurate. It's just a composite of central bank balance sheets, global, and some stablecoin issuance. Liquidity measures compiled to give us a depiction of the trend, a general trend. Like I said, it's not picture perfect, but we can see global liquidity has been on the rise quite steadily throughout 2025 and back into 2024. During these regimes, when global liquidity is on the rise, there are a few asset classes that benefit the most from these regimes. The first being tech, so the NASDAQ 100 and the Mag 7 are what come to mind. And then the next obvious one would be crypto. So every crypto cycle so far has been in line with when liquidity has flooded the markets and things just went straight vertical. Again, this is just going to be a quick mock-up. It's by no means pinpoint accurate, but this does give us a visual representation of Bitcoin's alignment with global liquidity expansion. With Bitcoin, there will be some points where reflexivity overshoots and undershoots with price. However, the general trend remains intact. So when we say global liquidity is expanding, that is a great indication that Bitcoin will follow suit in the coming weeks and months, which is why I'm not too worried about specifics from China. Just as long as I know they're continuing to inject liquidity, I know the rest of the world will most likely follow suit. However, when we engage with markets, we are always running the risk of probability. And when developing frameworks, I find it best to have scenarios with weighted probabilities for each scenario. I've made up this mock scenario tree for this video, but it actually includes some pretty good scenarios, I think. There's a base case bear and then bull case. The base case has been pretty accurate so far, which is Bitcoin catches a bid for the majority of the cycle, which we've seen since the cycle began early 2024. People were getting excited for alt season, yet it never happened. 12 months after the cycle, still no alt season. Bitcoin's still catching the bid. Why is that? Because of Bitcoin's properties and its evolution into a neutral reserve asset. People will bid quality before anything else, and Bitcoin is the highest quality cryptocurrency out there. But then also in the base case, altcoins will lag. However, that doesn't mean there won't be alt season. We're seeing the rotation now into ETH. Solana just had a catch-up rally, so things are looking up there. The bull case, everything pumps. Altcoins pump, Bitcoin pumps. We're all happy. I think that is yet to come. I don't think we're completely out of the woods yet. However, the bear case, we are nowhere near that. That is off the table for this cycle. As you can see, there are weighted probabilities for each of them. Base case 60%, and guess what? It's been true so far. So what can we expect? We can expect Bitcoin to slow down just a tad through these next coming months, altcoins catching more of a bid, and then eventually in the final months, we will see the euphoria stage of the market. If you guys enjoyed this video, drop a comment down below, hit that like button. Make sure to subscribe as well. I'll catch you guys in the next video.